Inviting me to speak here about the experiences of the DNB Boligkreditt as an issuer in the 144A market. Thank you also to the previous speakers describing all the technical peculiarities. And they did it much better than I would have done, so I'm happy that you are now well into the differences. And you have the necessary technical background to assess this. I'm going to present you a pretty simple, straightforward story about why a medium-sized bank domiciled in a non-EU country close to the North Pole is actually funding US dollar on a 144A basis. With the previous descriptions, I feel more like a gladiator than a banker, but we have managed to do this, and I will show you. I will partly describe why, and I will show you the track record, and try to conclude whether we are happy or not. So let's kick off. The first picture is just showing you the legal structure of the group, with the listed holding company DNB ASA on top, with the normal bond issuing entity DNB Bank ASA issuing senior and sub-debt and AT1, and its wholly owned subsidiary, the mortgage company, which I head, DNB Boligkreditt, issuing exclusively covered bonds. We are partly a mortgage company, but we are also the main funding instrument for the group in the wholesale markets. And since I have a 100% NOK denominated portfolio, you can always ask, what on earth are you going to do with dollars? And the answer is easy: I don't need them, but the bank does. My mother needs the dollars. That's why. This is the loan book, and you can see that residential mortgages account for approximately 45% of the entire loan book of the bank, and of that 45%, 85% of that is in my cover pool. So that describes the background. And if we move a little bit further, well, this is about, I will step back. The US-denominated part of the loan book is mainly linked to shipping. We are a large international shipping bank. It's also linked to energy and a couple of other corporate segments where there is need for dollar, and that's that's where the funding need arises. Going back to mortgage lending in DNB, this is just a traditional description based on customers' willingness to pay, their capability to pay, then the collateral, and we also have a monthly behavior scoring for our clients, so we follow them pretty closely. We are stress testing. For instance, if you have currently a 2% mortgage rate, you should be able to service without problems also with a 5% uptick, so i.e. 7%. So that's a pretty robust portfolio, actually. This is just a summing up of the Norwegian mortgage lending regulation. You should not gear up more than 5 times. Maximum 85% LTV, that's for the bank. In the mortgage company, you can only have 75% LTV. You are also in a situation, if you want to buy a secondary home in Oslo, you need to put up 40% equity. This is the FSA trying to calm down the property market. There are amortization requirements. I will not touch upon them in detail. And the banks can deviate from these rules at about 10% of total new loans. An exception for Oslo, where you are not supposed to deviate more than 8%. And if you look at the price growth, you can see that Norway has a steady increase and Oslo is rising faster. So property prices increased in 2016 in Oslo by more than 20%. So the FSA introduced very strict lending criteria from January 2017 to curb the house price development. They achieved a lot in 2017. Prices dropped in Oslo by almost 10%. And in the rest of the country, the picture was pretty stable. And now they are gradually picking up again. Just a little bit about the cover pool. We are running with an OC of around 50%. I told you that we are holding a very large part of the group's mortgage assets. Encumbrance limits, you might say. Yes, that has been a discussion in Norway. But when the financial crisis arose in 2008-09, we didn't have any access to international market funding whatsoever. So the government came up with a swap scheme where we could go take our cover bonds, go to the central bank and swap it for treasury bills. And of course, treasury bills from Norway, they are liquid anyway. But one of the effects was that the degree of mortgage of covered bond issuance went sharply up, surpassing all limits that people might have thought of introducing. So when we woke up in 2009 and 10, encumbrance limits was really not a discussion any longer. So this is something the FSA is aware of. It was a necessity to keep the industry going, but we live with it. It's not, and it's really not an important issue. LTV, running between 50 and 55, currently at 54. And there is a stress test description at the bottom, where you should assume we should be able to tolerate house price declines of, well, if it's 30%, we will still have an indexed LTV around 77%, and the OC will be down to 30. But we can take almost 50% drop in the current housing prices combined with a 6% non-performing ratio. So it's robust. This is the group's funding structure. Net stable funding ratio running around 105%. Average life of long-term funding is 4.1. And you can see the deposit to net loans ratio running slightly above 60%. So, what are we doing in the international capital markets? We have a lot of senior programs out of the bank, and we have the covered bond programs out of DNB Boligkreditt. And you can see that we have a covered bond program in Europe, in euro, or with the size of 60 billion, and we have the 144A program here in the US of about 12 billion. Let's see what we have utilized. You can see the euro transactions at the top, but the most interesting for you is to focus on the 3 outstanding US transactions under 144A at the bottom there, beside the arrow. And you can see we have 3 jumbos outstanding of a total of between 4.5 and 5 billion. So we are a reasonably significant issuer in the US market, despite all the efforts and costs involved. So, as I told you initially, we do it because we need long dollars for the lending activity in the bank. And that is, so when I issue dollars, I will go to the treasury with the dollars, and we will not swap them, because the treasury will need them for the lending activity in the bank, but he will give me Norwegian kroner back at the current rate. And we will have an agreement, a swap agreement in place, that when I hand those Norwegian kroner back 5 years later, I will get the dollars back from him at the same rate. So it's an internal swap, basically. As I mentioned, all my lending assets are in Norwegian kroner, and all the collateral is in Norway. So we are basically the funding instrument for the group, as I mention. These are the transactions we have done historically. The Norwegian covered bond regulation came in place in 2007, and 2008 and 2009, then we visited the central bank and got the treasury bills, and we didn't do very much else. But in 2010, we were able to launch the first US dollar 144A transaction, and you can see we have been reasonably consistent in the issuance. You can always argue that we should probably have been doing an annual issue, but this market is a little bit up and down, so there has been windows of opportunity and there has been closed windows. So it has been a little bit, not erratic, but we haven't been able to issue every year. What do we think? The two gentlemen ahead of me, they were pretty clear about what the advantages and disadvantages were. Seen from our perspective, we do need those dollars. It's the best way to fund them. It's the cheapest way to fund them. We find that the investors investing in the 144A program are bigger and are subscribing or underwriting bigger amounts than we would have been able to get under a Reg S issue. As I mentioned, I'm a funding instrument, and I do what my mother tells me to do. And it is investor diversification. However, we haven't really been able to, over those 7 years, expand the number of participating investors in each issue. It's the usual suspects that wind up each time, and they are taking their usual shares. Let's say we have 30, 40, and it seems quite hard to extend that investor base significantly. It's good enough for us, so we are happy to do it. It's costly, yes. It's a nightmare with the American lawyers. I can subscribe to that. It's also the problem that the funding window is short. You need audited statements, so we will typically issue around now because we got our finished audited statements back in March. Then you have a couple of months before you enter into a new quarterly report, and if you are to issue, you should have the most recent report to present, but then that would have to be audited, and there you go. So that's why we're trying to make one annual issue, simply to avoid full audit each time we're going to do it. That's also costly, even in Norway. The market has been volatile. It has not been, and it has been difficult to achieve necessary volumes and decent pricing every year. So we have refrained from issuing a couple of years in the period. But all in all, and to sum up, we are here to stay. We think it's a good diversification for the mortgage company, and also for the bank as such. And again, the bank needs the dollars. So that's our story. So if you have any questions, I'm happy to try and take them. Yes?
I'll claim total ignorance on the Norwegian housing market. With the decline, 10 or so % decline in Oslo prices, for example, it happened, I guess, early 16, after those rules were put into place. I'm curious about if you saw any impact on the local economy in that area, or were there any impacts, beyond just sort of a decline in housing prices and maybe some increased affordability? Trying to draw some parallels with our local market here.
Actually, we didn't. It does seem like it was a reaction to the extreme price increase you had the year before. The Norwegian economy was exposed to a small shock when the oil price dropped from $110 to $30, $40. And then we were concerned, and we did all possible precautions in order to prepare for stormy weather for a while. That worked quite well. There was a small uptick in unemployment, but not a lot. It went from 3.5 to 5%. Now it's heading down again. Cost level in everything that's oil service related or oil related has been taken down 30–40%. So it's been a turnaround. And this, but at the same time, when we're going through that period, it was only in the oil capital that house prices dropped. So I think when people woke up after 2016, they realized that this is completely crazy. And the FSA reacted quite strongly. So I think it was a reaction to a very clear, a very broadly communicated message that these markets must come down. And if it doesn't come down by itself, we will see to that it comes down. But during the drop in housing prices, the volumes were maintained. The market performed quite normal, but prices came down, and particularly for smaller flats in the Oslo area. But it went reasonably well, I would say. Some increase in LTV on our portfolio, naturally, but not more than that. Anything else? So I cannot say exactly when we are going to print again. That's something we'll have to discuss with the Treasury. But it's not unlikely that it will happen over the next 12 months. But we'll have to monitor the market and see. Thank you very much.